Let's get back to our coverage on gold's meteoric rise. Phil Flynn rejoins us from the Chicago trading pits, but we're also bringing in studio Andrew Schiff, investment consultant at Euro Pacific Capital, also known, we call you the smarter, sweeter brother of Peter Schiff.
Thank you. Someone had to be good.
What a family.
We're a yin and yang type group.
Good to see you.
Thank you.
Well, let's talk about gold. Peter and you have been talking for quite some time. Let's just say 2008 as saying gold will go to 5,000. We're not there yet, but we're really on a dramatic climb. Do we get to 5,000?
Well, it's kind of 5,000 is a big number, and that all depends on the dollar more than gold. I mean, that's the big variable in that equation. But it's only been less than 2 months since gold decisively broke through that $1,000 barrier. It flirted with it earlier in 2008, but when it broke through, we were always saying that if it did, it would move up very quickly because the psychological barriers would be eliminated, and it sure has. I mean, it's rocketed up to close to 1,200 right now. And I think it's really the reaction of what's going on in the world. It's not just the U.S. government that's inflating their currency and printing money to pay for things that we can't afford, running huge deficits. Countries around the world are trying to keep pace with the decline in the dollar by inflating their own currencies. So all this is boiling down into gold. Everyone begins to understand that gold will retain its value. It has retained its value. And now it's central banks, which were traditional sellers of gold over the years, are now buying in droves.
Now, it may not be a bubble, or it may not be the end of a bubble if it is. However, a lot of people are getting dangerously close to filling their portfolio with gold. We should mention that even though you are still bullish on the price of gold, your clients only average about 15% in gold.
Yes, I mean, and we're not telling anyone to be 100% gold. And a good adage to think about is this way. Everyone says you should have some cash on the sidelines in any portfolio, 15, 20, 25% cash, especially in hard times. We believe that. That's 100% correct. But what is cash?
Yeah, gold
is cash. Gold has always been cash and always will be cash. So if you want to hold cash in your portfolio, hold it in gold because that's going to retain its value.
Peter's also known for having called the Australian dollar years before, and then it took off. What is the currency right now that has the best yield that you guys like?
Well, Australia's still pretty good. I mean, I bought some Australian bonds yesterday for a client, and the yields are, up in the 4 and 5% range, for a 8 or 9 year bond to maturity. That's not bad. I mean, and they're raising their rates, and their economy is expanding and doing better than ours at this point. So all those resource currencies. Take a look at Canada. The Russian central bank today announced, or the Russians announced, that they're going to be moving more into Canadian dollars. And of course, they have a lot of resources underpinning the value of their currency as they export more to the Far East and to Europe.
Question: where do you put it? If you have hard gold, which a lot of people do as opposed to stocks that represent it, we just heard that HSBC is clearing out a lot of the smaller holders for the big time holders. Where do you put it? Where do you store it?
Dig a hole in the backyard and plant a pirate flag.
A lot of people are actually doing that.
There's a Perth vault in Australia.
Well, we do represent a program called the Perth Mint. Perth Mint is an Australian mint. You can hold gold there with a certificate without actually having to hold it in your house, and you have a lot of security that they'll give you your gold back. Or you can hold bullion in Switzerland, although the Swiss are getting very leery about dealing with Americans.
Phil Flynn is still with us in the pits. They don't think about storing this stuff, do they, Phil? I mean, they're talking about the trade, the actual trade, and when you start having commercials, and we keep bringing this up because we're trying to do well by our viewers, you've got, as we said, HSBC, everybody piling in on this trade for lack of anything better. Did the traders start to talk amongst themselves and say, watch out, this may turn quickly?
They do, but Liz, not as much as you might think, considering the dynamic move that we have seen. And really is because there is nobody really that is stepping up saying that this trade's going to end anytime soon. And of course, what I'm talking about is, the Federal Reserves. I mean, look at those Federal Reserve minutes yesterday. I mean, they're talking about interest rates being low for the foreseeable future. They're still talking about buying mortgage-backed securities. We may see more quantitative easing, and we're seeing the same type of talk from central banks around the globe. I mean, believe me, these traders are going to run like crazy the minute they see any sign that this trade's going to come off. But in the meantime, we're not seeing central banks discourage investment in gold. Really, what we're seeing is encouragement based on their policies and what they've been saying.
By the way, Andrew, what about inflation-adjusted bonds, tips that the government gives?
I want to get to that in 1 second. I'll say one thing about gold being a bubble. I mean, you have to understand, gold is not a tulip, and it's not an internet stock. It's got real value. There's a limited quantity in the world. gold. It's very hard to get. You got to dig through tons of earth to get just a couple of grams of gold. So it's hard to talk about it as a bubble because it's something people want, and there's a limited supply of it.
Yes, hold on a second, though. The people who say it's a bubble say, look what it costs to mine it. It's still a fraction of the cost that it's selling for. That makes it a bubble. Well,
It's also a question. There's a demand factor there. People want it because it is a store of value. Yes, the costs are. There is a fraction of the total cost, but it's still expensive. Tips. With tips, there's a couple of things. First of all, you're relying on the government to report the true rate of inflation. And, it's been our view, and it's well publicized, that we think that there's all kinds of hidden
noise
manipulations within the CPI. The government's got a huge vested interest to report that CPI low, and that's going to affect your yield and tips. And even if you get a couple of percentage points, it's not going to make up for the loss of purchasing power. So we're not very high on tips.
What's the gold of tomorrow? Peter talked Monday about it possibly being silver.
Well, silver is great. If you look at the long-term chart on silver, I mean, it's historically undervalued versus gold, and it fell a lot more in 08, and it's done better in 09, but it still hasn't closed the gap. So silver also is a component where it reacts to the overall economic.
By the way, folks, and you're seeing these prices moving a lot higher when it comes to silver, copper, and platinum, I would imagine. I don't know if we can get that chart up as well, but remember, there's some short selling going on today specifically. People are getting squeezed. This is a tough trade to bet against at the moment. It just seems the momentum is in favor of these metals.
Right now it is, and that's not to say it's not going to turn. I mean, there'll be a time when this particular run peters out and gold and silver will pull back. No, I think if you look at the long-term chart of gold going back to 07, you see a pretty solid base there. So, yeah, we wouldn't be surprised to see it come back a little bit and maybe back to 1,000, but certainly the long-term trend is up, and we really believe conservatively that the 1980 inflation-adjusted high for price of gold, which is around $2,300 an ounce, would be taken out with this move.
Wow.
Not saying it's not going to pull back, but that's certainly a reasonable target to expect gold to get to.
While we're talking about other metals, platinum for most of my life was cost a lot more than gold. Now they're practically at parity. Is that going to last for long?
I think it is, for the short term. I always go back to the old Barney Miller episode when we talk about gold. If you remember that episode from years ago, the guy said, I should be buying gold. And the guy's like, no, you should be buying zinc. Zinc's the next commodity. I think what this is that this is a metals mania. But gold is definitely the leader. It's going to drive up everything. But, the problem when we look at platinum and palladium and even copper, as great as they have been recently, they are being restrained somewhat because they really are industrial metals. What's going on with gold, goes beyond that. I mean, gold really isn't an industrial metal in any way. It is a safe haven metal. It is a replacement for a currency. It's the perfect gift for every vacation. It's a perfect hedge for every vacation, and that's why we're seeing money plow into it.
All right, gentlemen, thank you very much, Peter and Andrew Schiff. Great to see you. Phil Flynn, God bless. Good to see you. Have a wonderful Thanksgiving. Have a great Thanksgiving, by the way.
You too. Thank you.
Millions of Americans hitting the road.